Hi there, good afternoon. You're watching Closing Trades on ET Now. I am Snehi Shah and we are going to be tracking the last leg of the market on this show. Speaking of which, the market is doing very well for itself. 26,200 is where we are at exactly when it comes to the Nifty 50. We're off the day's low and about a 1/10% higher when it comes to the Nifty. Similar move coming for Sensex on the flat line with a hint of a positive bias, but we are above that 85,600 mark or somewhere around that for the Sensex, so looking good on that front as well. Nifty Bank 2 continues to be flat, absolutely flat above 59,300. It's the India Wix that has seen further cool off, a further 1.7% cut on the India Wix. That's taking it to that 9.5 level. It's a concerning level to watch out for on the India Wix. Other than that, let's talk about Coal India, Shriram Finance. These are your top Nifty 50 gainers. The exuberance on Shriram Finance continues from yesterday, wherein we had commentary coming in from MUFG and Shriram Finance. Remember, MUFG is going to be buying 20% stake in Shriram. Coal India today doing very well for itself, 3.5% higher. As is the case with Tata Motors PV, they've spoken about their growth and expansion plans going ahead. Their plans to introduce 5 new number plates as well. So that sounds good. Ultratech Cement, Power Grid, Tata Steel, NTPC, ONGC and Grasim. These are your top Nifty 50 gainers. On the flip side though, some stocks that were doing well yesterday from the IT pack, namely Infosys and Wipro, on the back of the weekend action that we saw in their ADRs. Those stocks are seeing some profit taking today. Infosys is lower by 1.25%. TCS is lower. The IT pack right now is not doing all that well, as is the case with Bharti Airtel, Sun Pharma, Cipla, ICICI Bank. If you take a look at the advance decline ratio, it is still in the favor of the advances, but that tilt that we were seeing towards the advances has reduced, so more stocks have slipped towards the declines, but nonetheless the breadth of the market continues to be favorable, because if you take a look at the mid-cap end of the market, the mid-cap end has been slightly under pressure today, but the small-cap end of the basket has been doing really well for itself, and it's on the back of some of the names like GPT Infra Projects, Sangvi Movers, Rides, Antony Waste, Bellrise Industries. Lots of news flow and lots of individual news action coming in from most of these companies in the positive territory, which is what is keeping the Nifty small cap index higher. But to understand which stocks are in focus, where is all the action in the market at the moment, let's take it across to my colleague Rabinder, who is joining us with a list of all the stocks that are abuzz today. Rabinder.
Well, it's a rights is in focus where company has received a LOA from Nadalma Capital, South Africa for supply and commissioning of in-service diesel electronic locomotives, and the total order value of this order is USD 35 million. Shakti Pumps is also buzzing on the back of their order win when company has received a LOA for the project worth of rupees 356.7 crore from the Maharashtra State Electricity Distribution Company. Sangvi Movers, another stock buzzing on the back of their order win, where company's renewable energy subsidiary has secured a large EPC wind BOP order worth rupees 428 crore from the multiple IPPs to be executed between FY26 to and FY28. Sri Cement is also in buzzing. Stock is up around 2%, where management has withdrawn the lockout of the Raipur plant with effect from December 22, and company's management and workmen has arrived at the amicable settlement to resolve the standoff. Tata Motors passenger vehicle is also buzzing on the back of positive management commentary, where Sailesh Chandra said that the company has a plan of rupees 16,000 to 18,000 crore investment between FY25 to 30, and they have plan of 1 million charging point by 2030 and 100k public charging point by 2030. JK Tires is buzzing on the back of the positive brokerage note, where MK has come out with a note where they have maintained the buy rating and hike target price rupees 625 as compared to earlier target price rupees 575. They believe that the company is entering in the phase of accelerating revenue growth with additional levers for the margin expansion, premiumization and turning CV cycle, and margin is expected to cross the previous peak and with multiple levers in the place. So back of this bullish note from the MK, JK Tires is in focus, and the stock is up 4 to 5%.
Thanks so much for taking us through that. So yes, interesting note coming in from MK on JK Tires. They're saying margins are expected to cross the previous peak. Multiple levers are in place for this one. In fact, they've hiked the target price also to 625 from 575. Good move coming in on JK Tire today, a 4% uptick over there. But let's focus and talk about the overall market structure, what we can expect to see from the markets in the near term, at least on the technical front. We have Mr. Akshay Bhagwat from JM Financial Services joining us on the show. Akshay, hi, good afternoon, and thanks for your time today. First of all, before we get into the stock specific action for the day, give us a sense on where you're seeing the markets headed right now, given that we're absolutely on the flat line, but Nifty is trying to break into the positive territory and 26,200 is something that we're trying to hold on to. Do you believe over the course of the week this is a level that we can hold on to or at least be around?
Good afternoon. Well, if you look at the December month, I think it's more a range bound series with the Nifty time and again taking support around 25,750, 25,800 zone. You have had bounce back scenarios from there, but again, 26,350 has been a hurdle at least for the month of December. Those are all-time high levels. So the similar pattern continues for the remainder part of the December month, and I think with the strong bounce back backed by buying interest in the futures and options segment, a broader market rally in the last 3 days, I think Nifty should reattempt to break or get past the levels of 26,350.
Okay, so that's your take on the Nifty pack. Let's talk about some stocks, Akshay, that are in focus today. A lot of these small cap company stocks, the likes of Bellrise today, is in focus on the back of promoter stake sale happening, and also the company has tied up an agreement with Israel-based Plus and SAAC for their military vehicles. So that's positive on Bellrise. Anthony Waste today is in focus on the back of a new order win, as is the case with GPT Infra Project, Sangvi Movers. Akshay, are you tracking any of these smaller cap names right now? Because we're seeing a lot of order win exuberance among some of these.
Yeah. So, well, if you look at Anthony Waste, out of the names which you mentioned, I think from a fresh buying perspective or hold perspective, this stock has seen strong volume participation in the last three trading sessions. So, 450 to 500 is roughly the zone where there has been an aggressive spike in volumes, and correlating the move with the prices, it probably is assumed that this is more of strong buying which is emerging around the levels of 450, which is a very strong support for the stock. So positionally, the way the price structure is playing out, the stock may head for upside till around 700 from a 3 month plus buy and hold perspective. So positive view on Anthony Waste for possible targets around 700.
Anthony Waste. Let's refocus, and Akshay talked to us about the Nifty IT index. Yes, significant drawdown today on the index, about 0.8% higher. So that's the pullback that we're seeing. But the exuberance that the IT space has seen over the last couple of weeks, do you believe that makes up for a strong case on the charts to now buy the little bit of a dip that we're seeing in some of these IT names today? And if so, would you prefer the large cap IT names over the mid caps? Which ones are looking better on the charts?
Well, I completely agree. IT space has had their fair share of rally in the last 3 months. Many of the IT names priorly had been beaten down. Strong recovery in most of the names. But now, from here on going forward, you have to be very selective with the names in IT space, because one is most of them are a bit overbought on the technical charts. There are signs that temporarily before the December end, there may be a slight corrective dip in majority of the IT names. And the stocks here, which look potentially good, considering the fact that from first week, second week of January, you have the quarterly updates, starting with the IT names. I think a couple of IT names where you can be looking forward for buying opportunities. One will be an HCL Tech, where there is a good, strong technical pattern in place. A breakout is in the making from a short-term 1680, 1700 zone, and possibly the stock is setting up for targets of around 1800. For a stock like a Dixon Tech, which is more of a bottom fishing candidate, 12,000 is a massive support from the stock. There has been strong short covering uh, or buying intent, which we have noted with the technical bounce noted around the levels of 12,000. And this just makes me believe that this is an excellent opportunity for short-term risk-reward favorable opportunities, where you can see a pullback right up to 15,000 in Dixon Tech.
Okay, so those are a couple of stocks that Akshay is liking on the charts from the IT group of stocks. But let's just focus and talk about financials. And while we're talking about that, watch out for Cholamandalam Finance today. A one-way gain on the stock, a 6.25% higher is where the stock is right now, because the company has issued a clarification addressing allegations made by Cobra Post against the company, the Murugappa group of companies, and their promoters as well. And they have denied all allegations, calling it malicious and baseless. Mitali is here to tell us more about everything that has transpired in terms of the Cobra case allegations and what the company had to say, that Cholamandalam had to say in their con call this morning. Mitali, take us through all of that.
Right. So we saw that the stock has been trading in 6 to 7% upside since morning after the management has denied the allegations of Cobra Post and calling them malicious and baseless. And also they have maintained their business guidance, whatever they had given in earlier Q2 con call. The company maintains their asset quality, their liquidity and operations remain robust throughout. Also, they have mentioned that their cash and bank balances as of November 30th, 2025 stands at around 14,900 crores. And also the allegations posted all about the credit ratings, they stand malicious, as the credit rating of the company stands at AA+. Also, the stock has outperformed the Nifty benchmarks and also the Nifty Financial Index, giving 42% year-to-date performance. So let's have a look on the growth and the business mix. So growth continues to be driven by a shift towards their non-vehicle finance segments. Also, the loan against property, that segment grew 33%, while their SME AUM also saw a growth of around 28%, offsetting their muted growth in the vehicle finance business and the home loan disbursements. If you talk about the FY26 guidance, which the management has reiterated that it continues to remain same, for FY26, management has reiterated the AUM guidance by 20%, and Q2 we saw that the AUM rose nearly 17 to 18%. Guidance on disbursement has been softened due to high single digit to 10%. Also, the NIMs, they improved from 7.5% earlier to 7.9%, and management has reiterated saying that there can be improvements by 10 to 15 basis points in the NIMs in the second half of the financial year. So what investors should watch for next in the second half will be the key triggers, including a pickup in Q3 and Q4 disbursements. Also, the growth in the non-vehicle segments like LAP and SME running at nearly 30% is a key area to watch. On valuation front, if you see, the stock is now trading at around 5.5 times the book value, with a 1-year forward price to book ratio of 4.23 times, and also at a discount from its 5-year average of 5.3 times. So all in all, the company stands quite robust, and also the fundamentals and liquidity position remains to be stagnant ahead of all the allegations that they have said are malicious. Back to you.
Mitali, thanks so much for taking us through that. So yes, that's all the clarifications that were coming out from the company in their con call this morning and also their press release. And the street has taken all of these clarifications against the Cobra Post allegations very well. And in fact, Cholamandalam is doing very well for itself right now. Akshay, what really attracts me about this stock, or it really excites me to see, is that the stock is already up more than 40% on a year-to-date basis. Now, given the other sharp rally that we've seen today, up 6.5%, what kind of growth levers do you think, at least on the charts, does this stock have any further run up or time for some cool off, given that it's already seen a 40% run up this year?
Yeah. So if you look at the stock, I think there has been a strong run up already, and looking at the kind of percentage returns which it has rewarded the investors, I think there is a case building up where temporarily the stock may get into a phase where you call it more of a time bound correction, where the stock may stay in a range. That does not mean we are talking about any strong correction from here. From here, it will be more of a buy and hold kind of a candidate, and surely it will reward you with greater returns. But again, time is the key here. So 6 months plus waiting is more needed. Probably for the next couple of months, you might see a range bound scenario developing in the stock.
That's the take. Maybe a range-bound scenario is what is building up for this stock for the next couple of months. But let's shift focus and throw the spotlight on the cement space. This sector has been in focus ever since the get-go today, the beginning of the trading session. It's a couple of stocks in this pack, rather. Ambuja Cements, that stock is in focus as the ACC and Orient Cement merger gets a nod. The proposed consolidation is expected to be completed over the next year. And my colleague Ashesha is joining us with more details about what the share swap ratio is, how is this amalgamation going to take place. It's a big one at that. Ashesha.
Well, yes, big news that came in for the cement sector this morning, where ACC and Orient Cement will be amalgamated with Ambuja Cement, and the entire Ambuja group of stocks and Adani group of cement companies will now be housed under one company, and that is Ambuja Cement. The company will be issuing shares to public shareholders of both ACC and Orient. Shares held by Ambuja will stand cancelled, and all assets, liabilities and all arms will then be transferred to Ambuja Cement. So that's how the entire transaction is set to happen. Now, as a result of this, promoter shareholding is likely to come down from 67% currently to 60%. Sanghi and Penny merger, of course, are under process. That is likely to take some more time. But the merger, this particular transaction is likely to be completed over the next 12 months. That is what the management has stated in their press release. Let's also talk about the kind of benefits the company will enjoy. The company says that merger will create a pan-India cement powerhouse. That was the main reason they've gone ahead and merged all these Adani Group cement companies into one company now, and they aim for single consolidated single cement platform, which is likely to come into existence going forward. So that is the main objective behind this demerger. They will also enjoy synergies as a result of lower logistics costs that the company will enjoy, the expansion plans that the company has going forward, and it will also help them improve their margins by 100 rupees per ton. Remember, Ambuja currently earns about 1000 rupees per ton as EBITDA margins, and that is likely to inch higher as a result of synergetic gains that the companies will enjoy. Other than that, it will streamline their corporate structure, balance sheet position will get strengthened, and efficient capital allocation, that is another objective that the company intends to achieve as a result of this entire merger and amalgamation process that the company has announced. Now, let's also talk about what this will mean for the entire industry. Remember, there will be only two major cement players in the industry. Cement major Ultratech Cement, which will continue to be the market leader, which is aiming to reach capacity of 213 metric tons by FY27, and Ambuja is targeting 155 MTPA by FY28. So those are the capacity expansion plans that both these major companies are looking at. Let's also talk about what this means for shareholders of ACC and Orient. Now, for ACC, the current shareholding of 100 shares translates to about 1,77,000 odd rupees, and this is exactly the same for their shares that they will get in Ambuja. So there is no profit, no loss for ACC shareholders. But on the flip side, let's also talk about Orient, because they will tend to gain to the tune of 9 to 10% basis the current market price of both Orient and Ambuja. So shareholders of Orient will tend to gain. So that's how the entire transaction is set to happen. It is likely to be completed over the next 12 months, but definitely analysts believe that a major overhang is out of the way now that the corporate structure has been aligned, and because they are going to enjoy synergetic benefits, EBITDA margin for this company is likely to improve going forward.
Okay, so that's the take on this entire amalgamation and the merger that has been underway for quite some time and finally getting that clearance. ACC, however, is lower by about 1.5%. Let's see what Ambuja and Orient are doing. Ambuja is doing pretty well for itself, about a 2% uptick coming in for that one. Let's also pull up Orient Cements and see what that stock is up to. Akshay, your take on the charts on any of these names, ACC, Ambuja, or perhaps let's talk about the competition, Ultratech, Grasim. Which one from the cement space is looking good to you, or is it some of the slightly smaller names that are looking better right now?
Based on the technical charts, I will stay with the stronger or the bigger names. So if a choice is given, Grasim, there is where the stock is possibly under accumulation, looking by the price and the volume action. 2834 is the current market price, and possibly the stock is headed to cross around 3000. So there is where strength lies. Ultra Semco is the another stock which you can look forward to. A very strong recovery in intraday from the levels of 11600. There is a case building up for a base setting up around 11400, and the short term space you can see the stock again recovering its lost ground and going to around somewhere around 12300 to 12400. Ambuja Cement is moving more on news, so really some bit of more clarity will be needed on placing fresh trades, but overall 525 is the support zone, and expecting a range bound price structure to continue for Ambuja Cement. So I'll stick with the stronger names to trade, at least in the cement pack.
Okay, so that's the take. Staying with the bigger names right now, and that's the chart check on Ambuja Cements as well. But on that note, we'll slip into a very short break, and when we return, we'll keep the fundamental conversation around the market going. We'll be joined by Siddharth Vora of Quant Investment Strategy on the other side. So stay tuned, and we'll be right back. Back with closing trades, the markets are holding up absolutely flat. Not much happening right now. It's a range-bound trading session for our market. But yes, we've seen a little bit of a spike up coming in, but we continue to hover around the 26,200 mark. Let's get into a fundamental conversation about where the markets could be headed. What are some factors that you should be watching out for as we wind down 2025? We have Mr. Siddharth Vora, Head of Quant Investment Strategy and Fund Manager at PL Asset Management, joining us on the show. Siddharth, apologies about earlier, and thanks so much for your time today. Give us a sense of where you're seeing the market headed as of now, given that we've been absolutely range bound. But yes, of late we've seen some recovery. Do you believe that this is just the year-end cheer, or do you believe there is actually some fundamental strength that is returning in a market that has been range bound for a very long time now?
So I think India is genuinely looking like it's set up for a good constructive cycle in terms of domestic equities. And there are multiple factors, coming together at this point of time. If you really look at it, the macro is really strong from a growth perspective. We're in a low inflation environment. The monetary and fiscal policy in terms of, rates and taxes is very supportive. So I think this is favorable. From a quantitative indicators perspective, the risk appetite bottomed out around Feb, and since then it has been steadily but gradually rising. So the risk appetite is healthy, coupled with low volatility. So the uncertainty of fear currently is quite low. The earnings downgrade cycle is pretty much behind us, and we've entered an earnings upgrade cycle. So from a growth perspective of corporate India, again, things are looking good. Crude dynamics are favorable. Another important point here is the relative valuation of India, versus emerging markets, developed markets, gold and silver have hit pretty much cyclical troughs. So when you're looking at a market with the best in class growth metrics, very stable, steady macro, and low relative valuation, I think it makes a really good case. And we obviously can't forget the whole anti AI trade. So India never participated in the whole crypto and AI rally. But now, as the crypto and AI rally is unwinding, I think India is a good neutral market for foreigners to allocate amidst the entire meltdown in AI and crypto.
Okay, so that's the consolidated view on the market right now. But Siddharth, you did say that we're set up for a constructive cycle going ahead, and you also spoke about some of the tailwinds that are headed our way. Do you believe FIs are also sharing this view right now, or they're starting to change the thought process towards this direction, given that we've seen absolute lackluster FI buying? In fact, we've seen so much selling. It has come back to some extent in the last 2 or so days, but that also fizzled out quite quickly. What is your take over there?
So I don't think FII buying is currently meaningful. It continues to be a source of risk for India, but we need to, cheer our domestic investors for keeping our markets steady, stable, and resilient. And it's only a matter of when and not if when foreigners come back to India. So as I said, there's a confluence of multiple factors in terms of earnings, valuation, domestic liquidity, macro, geopolitical stability in India that makes India a very good structural long term story. Of course, the medium term and long term outlook continues to be great. In the short term, we do see multiple risks. The Japanese yen carry trade unwinding, that is a potential risk. The weakening INR, some breadth measures still continue to be a little weak as of now, but they are turning up. So in the short term, we could see some improvement in broad-based participation in India as well. And I think the bigger risk for the next 5-7 years is that India does lack any meaningful AI play. So that is the only major risk that could, keep FIIs away. And of course, the trade deal, it's getting delayed. So that's an overhang. Hopefully, it gets resolved with time. So overall, we do see there are risks, but I think the risks will eventually resolve over time, and foreigners will have to look at India for its breadth, strength, the size of the economy, and the stability of macros. So we're looking good.
And Siddharth, amid a market like this, where do you think the portfolio bias should be? Should one be playing it safe with the larger cap names right now? Or do you believe that the valuation correction, if at all we've seen in the mids end of the basket, makes that end more attractive? Where would you be placing bets in your portfolio?
So our portfolio currently, we are 85% large and mid caps, less than 15% small caps. Small caps, honestly, from a valuation perspective and from an earnings perspective, they've disappointed on growth, and the valuations are not cheap anyways. So we are more comfortable, and our models are also capturing better opportunities in large caps and mid caps, either where growth is very strong or where valuation is very comfortable. But small caps, most of them are not fitting that bill of as of now. And currently, our style orientation, so we are a style adaptive strategy. So it keeps changing style orientation based on the market cycle. We're currently running a value orientation since March, April. Prior to that, we were running a quality and low vol orientation for like 9, 10 months. And prior to that, we were running a momentum orientation for 12 months. So our style orientation keeps changing. Currently, our portfolio is tilted towards value. And we're more bullish on sectors such as materials, metals, energy, commodities, basically high beta cyclical sectors. And we also have meaningful allocation within the entire financial space. So financials, materials, and metals have been the dominant part of our portfolio. So we do have a cyclical tilt.
Okay, and where in your portfolio, Siddharth, does consumption find a place, given that the GST play is now gradually playing out the GST cut rationalization that we've seen? What about consumption? Amid consumption, is it discretionary, staples, or then are you looking at auto, perhaps real estate? What's looking good over there?
So we have a roughly 13-14% allocation to auto, and as a defensive allocation within the rather aggressive portfolio that we are currently running, we've started entering pharma and IT as the defensive place rather than domestic consumption. So we're not playing the traditional consumer stories. Auto is literally the only consumer exposure we have in the portfolio for now.
Okay, and Siddharth, very interestingly, you spoke about pharma. Just want to understand, within pharma, are you going with the CDMO play that has been a common preference for a lot of managers right now? Or are you looking at the new semaglutide space that's coming up? We've got Sun Pharma over there. Zydus has received approval today to launch their own semaglutide drug. Cipla has a play over there. What's looking good? Is that a space that you're looking at right now?
So we currently own, Lupin and Dr. Reddy in the portfolio, and we are still, evaluating the broader pharma space, and gradually we'll build some positions there. But too early to say because we've just started, entering pharma.
And metals is something you like. You spoke to us about that. Within metals, do you have a view, and do you own precious metals as well, gold and silver, given the kind of rally that we've already seen this year in both of those commodities?
So, within our, we run two strategies. One is a flexi cap equity strategy, and one is our multi-asset strategy. So, in our flexi cap equity strategy, we have roughly 20% allocation to metals, including ferrous and non-ferrous. And we've maintained this position for over 6 to 7 months. So, I think that's played out pretty well for us. In our multi-asset portfolio, we have increased our gold allocation roughly 17, 18 months back, from 10% to 30%. And we continue to ride that 30% allocation in gold since the last 18 months. And I think that has not only given us a good hedge, but a great diversification in a cycle where Indian markets have gone nowhere. And our gold allocation has really done very, very well for us in our multi-asset strategy.
Okay, so that appreciate that view, and thank you so much for taking the time out and speaking to us today. Good chatting with you. Okay, viewers, on that note, we'll slip into a very short break. On the other side, we'll continue the conversation around the technical setup in the market. We have Akshay Bhagwat, who's been waiting by with us, so we'll keep that conversation going just on the other side of this short break.
Back with closing trades right here on ET now, and we're holding out okay so far. Quiet consolidation after that move on Friday as well as Monday yesterday. Holding around the 26,200 level on the Nifty weekly expiry day on the futures. Chola Finance, that's pretty much undoing all of the damage from yesterday. That stock holding up a good 6.5% as we speak. IRFC has jumped about almost 4.25%. And it's good to see that the metal space is only broadening further. Look at an NMDC that's also now almost notching a 4% gain as we speak right now. And then, of course, RVNL too continues its up move from yesterday. Still got Akshay Bhagwat on the show with us. Excuse me. Akshay, if I just could get you in on the likes of IRFC as well as RVNL. RVNL, of course, is seeing a very smart follow-through price action from its move yesterday.
Yeah, so if you look at most of these names, these were heavily beaten stocks in the last couple of months, or they were not performing in terms of the price action. Now, suddenly in the last 3 days, there is a sudden move in these stocks which has come out of the blue. They are rebounding very strongly off the support. So first of all, talking about IRFC, 110 is a very strong possible double bottom support and the kind of volume participation you have. Positionally, again, the targets are opening up for the stock to overcome the levels of 140. So very strong technical risk reward being offered at the current rates, where you can participate in the long side at the current rates.
Okay, that's on IRFC. But Akshay, your view on some of the other railway counters that have been doing well, Jupiter Wagons, RVNL, Railtel, any of these looking attractive on the charts?
So most of them are more of short-term bounce-back candidates, considering that the momentum was off in the last couple of months. And I think with the rail budget just a month away from here, there is going to be traction and sentimental buying interest ahead of the event. So RVNL is the other name, where 300 is a very strong support, which has been confirmed post today's move on the upside. This just sets up the chart for a possible positional upside all the way up till 400 levels. And even if you look at Jupiter Wagons, a similar kind of a price chart structure playing out, strong volume participation happening after many months, and this has potential to take Jupiter Wagons to levels of 400 again.
Okay, that's some of the railway names. Of course, Jupiter Wagons being one such case in point, holding out very well. Yesterday it was Titagarh which made a decent move. But Chola Finance, we've been talking about that. That's also dashed up a good 6.5% after the clarification set out from the management. But you know what? As we step closer to the end of the year, we can finally look back to the year that was for defense. How did it pan out? And how big were the reforms for this sector? Kanishka, in fact, is here from our research desk with a wrap.
Absolutely. So 2025 has really been declared the year of defense reforms by the government itself, and the country's defense sector, it's charging ahead like never before. Structural reforms, they took the center stage with the rollout of integrated theatre commands that's unifying the Army, Navy as well as Air Force under Western, Northern and Maritime theatres. Now this boosts joint operations and faster decision making as well. If we talk about production, defense production hit a record high of anywhere between 1.3 to 1.5 lakh crore rupees, with the private sector participation now up at 23%. This while exports have also crossed 21 to 3,000 crore rupees in exports, that's reaching over 100 countries for India. This includes the likes of US as well as France. Now on the indigenous front, lots of milestones over there as well. These includes the likes of INS Surat under Project 15B, INS Nilgiri of Project 17A, and the completion of Kalvari class submarines with over 5,500 items now indigenized. In fact, India is also stepping into futuristic warfare now. Successful tests of directed energy weapons, the launch of Quantum Technology Research Center, and deployment of anti-drone systems like Bhargavastra. Now, missile capability that has also strengthened with Agni Prime Rail mobile launch test, while aviation that also saw a boost with the AMCA or AMCA's 5th gen fighter approval and a 62,000 crore rupees order for 156 LCH Prachand helicopters. And finally, the private sector that's also stepping up with the Tata Airbus C295 plant in Vadodara already becoming India's first private military aircraft manufacturing hub. So yes, 2025 does mark a transformational year for India's defense sector, indigenous, futuristic and globally competitive.
Okay, Kanushka, thanks so much for taking us through that. Akshay, any view on some of the defense counters that were in focus even yesterday? The pack was abuzz, and especially the shipbuildings names like your Mascot Dock, Cochin Shipyard, GE Shipping, all of them were doing very well. Any view on any of these names?
Yeah, so as I mentioned, as you see in a similar kind of a bounce back in the rail pack, the defense pack also has lately come out very strongly with strong volume participation in the last 3 days. So if you were to name a specific stocks here, I think HAL, Hindustan Aeronautics, and BEL, these have potential still to outperform or move significantly from the current levels as we move into the new year. So if you look at HAL, there is a strong support build at the base building up at 4200. Strong volume participation and the price setups makes me believe this stock is heading for upsides till 4800 from a positional perspective. BEL, Bharat Electronics, is the other name which has the potential to crawl back to its lost ground and reclaim around levels of 425 up again. As far as shipbuilding names are concerned, this is more of a trading pullback rally and doesn't build a case for any positional buying from the current levels. It's more of a dead cat bounce. That's what the charts have to say.
Okay, so that's on some of the defense names, but let's shift focus to real estate. And one stock that is surging today is Purvankara. Let's pull up the charts and see if the stock is still continuing to be at the day's highest point. Nifty really looking tempered right now because of some of its index participants, but Purvankara almost at the day's high, a 15% uptick coming in on that stock post a land acquisition in Bengaluru. Now, why is this such a big deal for the company? What does this do in terms of the land bank of the company? And why is the stock reacting the way it is? Ravinder is here with all of those details.
Well, as Purvankara Limited is in focus, the company has acquired a 53.5-acre land parcel in Bangalore with a sellable area of approximately 6.4 million square feet and a potential GDV of rupees more than 4,800 crore. And the acquisition strengthens the company's presence in emerging residential growth corridors of Bangalore and is aligned with its company's strategy to expand across key micro market, which is supported by infrastructure upgrades, improved connectivity, and a sustained end user demand. And during the FY26 year to till date, the company has already added a project with an estimated gross development value of approximately 9,100 crore with this latest acquisition, and the development area rises to 12.76 million square feet, while potential GDV increases to approximately 13,900 crore. And overall, the transaction meaningfully enhanced Puravankara's launch pipelines and GDV visibility, reinforcing its growth strategy in high demand Bangalore micro market. And commenting on this, management says that it is disciplined reattire that disciplined long term growth approach which is focused on consistently adding quality development land across strategic micro market. So back of this, Puravankara Limited is in focus.
Yes, it sure is. And what a move coming in the stock price, a double-digit run at that. In fact, on that note, we're going to take a very quick break, but come right back. We'll have all our experts talk about how trade today is going to be, and of course, how the week ahead is going to look like.
Back to closing trades, and yes, we're seeing a little bit of a further uptick on the market right now. We were seeing that for now, but we've slipped slightly. A 0.2% uptick is what we were seeing for the Nifty. In the last couple of minutes itself, we've slipped from there. We're absolutely flat once again for the Nifty 50 and also below the 26,200 mark. The Sensex has slipped into the red, as is the case with the Nifty Bank, looking absolutely weak right now. But you have a 2.5% further cut on the India VIX right now, and we've slipped even below that 9.5 mark on the India VIX. So that is looking like a sign of alarm for the market. It's Coal India, Shriram Finance, Tata Motors, PV that continue to do well, but the cut intensifies on Infosys, now 1.5% lower, along with Bharti Airtel lower by 1%, Adani Ports, Sun Pharma and Cipla that are also not doing well. Now remember, the advance decline ratio continues to be in the favor of the advances, but now there are more stocks that have slipped towards the declines. So also watch out for what the market breadth is doing. Just taking a quick stock of what some of the stocks from the broader end of the markets are doing. Coforge continues to be under pressure, a 4.5% cut over there. Latent View, Kajaria Ceramics, Chennai Petroleum, Aegis Vopak, CCL Products are some of your top Nifty 500 losers. But it's Jupiter Wagons, Ircon, IFCI, 3 railway counters including Railtel and RITES. In fact, all 5 of them doing very well. The railway pack is looking good, followed by Chola Finance, Godavari Power. You have JK Tyre on the back of that very bullish brokerage note coming in. IRCTC once again from the railway pack, NLC India, HFCL on the back of their QIP, and NMDC. Some of these stocks are doing well. But let's shift focus and talk to you about an ET Now exclusive. The government may invite financial bids for IDBI Bank in the next 15 days, is what sources tell us. Prakash Priyadarshi is joining us with all of those details.
Well, an important development coming in as we are learning from our sources that the government may invite financial bids for IDBI Bank within the next 15 days. A very crucial development coming in. Sources indicate that the process of inviting financial bids is at a very advanced stage. In fact, the alternative mechanism on disinvestment has approved the bid structure. The government panel headed by the finance minister has given its clearance, and the financial bids would be invited very soon. Along with that, sources also suggest that the security clearance for shortlisted entities has been received from the Home Ministry. In fact, fit and proper evaluation has also been granted by the RBI. You are aware that the DIPAM has already completed due diligence of shortlisted entities, and the government is planning to complete the transaction by March 2026. A very crucial development coming in. Sources indicate that 4 entities are likely to be in the race to acquire IDBI, wherein Fairfax Financials and Kotak Mahindra Bank are set to be among the top contenders.
Okay, the buzz again on IDBI Bank stake sale. But that said, let me welcome on board Shivangi Sardar as well. Shivangi, hi, afternoon. Good to have you on the show. Not done bad at all, at least the past 2 trading sessions, Shivangi. Does it seem like we could perhaps make a dash for the all-time high once again before we wind down for the year?
Very good afternoon, Aisha. Thank you for having me. So we've seen that these levels have quite a lot been a struggler for Nifty. We've seen attempts of the lifetime high levels twice in this span of 3 weeks. But of course, we've seen a little bit of call writers unwind their position as well. So overall, looks quite optimistic. We've come out of a narrow range from the weekly basis. And the kind of follow-up that we are seeing is quite strong. Of course, today we're seeing a little bit of volatility because of the expiry, but we are expecting this momentum to continue. The good part is that there has been a good, RSI divergence on the lower time frame. And even though there has been a very consolidative session today, but then overall it is holding above 26,150 marks. So we are expecting this to continue towards the life high levels, 26,325 and above. And we are expecting this index to remain a little bit consolidative, but a support of 26,050 would be a level to watch out on an immediate basis.
Okay, and Shivangi, hi, good afternoon. How should one read the move that we're seeing on the India VIX at the moment? Another 2.5% cool down over there, and now we're even below that 9.5 mark. What does this indicate in terms of sentiment in the market?
India VIX has actually made the entire option premium quite tricky because we've seen that it has actually started to trade in the single digit, and this has caused a lot of option squeeze. So this means basically that the premiums are very less, and as it is, its expiry, so time decay wasn't there at all. Which made the options jump quite a bit in a consolidative band. So now, because of that, the option buyers and writers both will have a very tricky position to make money. Of course, strategies will work best in such kind of a market scenario, but to get premiums will become difficult. Now, talking about this scaling down of India VIX, of course, the bulls are in comfort. But we are seeing that as and when we are rising, above the index on the ladder, the band is becoming smaller because of the India VIX squeezing. So this will be a challenge for the option traders. going ahead.
Shivani, can't get your eyes off from what silver is doing. Even as I speak right now, there's a fresh record being broken. That and its impact on names like a Hindalco and Nalco, Shivani. Shivangi, what's the best way to trade this silver move now?
Of course, metals have been shining and outshining, like ever. But we've seen that, these stocks tend to do quite well in momentum. So, of course, Nalco is one stock which has been on our radar. And we've recommended this one. It has been the strongest among the lot, and it has been trading in an upward sloping channel as well. Uh, this one would, of course, fetch a steady return and a slow and steady one instead, but we're expecting levels like 300 and then 304 for Nalco. Looking at the other metal pack, Hindalco is also one of those stocks which has been giving good amount of return. In this year itself, it has moved around 45% till date. So overall, quite a strong counter, and we are expecting on an immediate basis 1,000 and then 1,000 1100 odd levels for Hindalco. So these could be kept on radar.
Shivangi, trick question, but what's looking like a stronger chart? Gold, silver, or Nifty?
Absolutely a trick question. And, equity might be the evergreen thing to have in your portfolio. But of course, silver and gold have, outperformed as well. We've seen that, the gold silver ratio of late has sunk, which indicates that silver is going to outperform in the next few, months, I would say. So definitely out of the gold and silver, silver looks more positive. But of course, Nifty has, of course, also, outperformed. We've seen heavyweights doing, much better than the other counters. So my focus would be on silver and the heavyweight counters in our index in the equity market.
Right, and Shivangi, let's talk about some year-to-date moves and the exuberance that we've seen in the Nifty PSU Bank basket. Yes, off late we've seen a little bit of a cool-off on that front, and it's the private banking names that are taking all the action ahead. But what is your take on PSU banks? Roughly 27% higher on a year-to-date basis. More legs to that rally for 2026?
Of course, the entire PSU banking space stocks have been the hero of the year. And we've seen that these stocks have moved by almost 50%, the good ones, of course. And the momentum is still continuing. The good part is that follow up is quite strong here, even if we are seeing consolidation at the higher zones. But the good part is that there has been consistent buying here. CanBank is one such stock which has kind of performed at on a month-on-month basis. It has continuously made higher top, higher bottom, and this is one stock which could be kept on radar for a portfolio stock. Of course, if we want to go for a SBI, that is strong as well. But then we'll also have to see that on a year-on-year basis, this has moved comparatively less because of the kind of position that it holds. But definitely, CanBank is a much better pick in this space.
PSU banks, it is. But Shivangi, as you look ahead into the year, where is it that you see the strength pockets? And would you say the bottom-up stories are looking more attractive? Case in point being, the way the move on IT is played out in the last few months.
Yes, of course, Aisha, IT has been one of the stocks or the sector which has come in limelight of lately, especially after the movement of the dollar that we've seen and the kind of, export import values that have been affected. But overall, I feel IT has been one sector which has moved to again fall. We've seen that most of the heavyweights or the mid cap names as well, they have kind of attempted to show recovery, but then they've overall failed, and on year basis they are trading almost flat. So on IT we could use a wait and watch approach here. But then again, the other sectors which are looking quite good are some of the diagnostic name stocks. And apart from this, of course, banking and auto continues to remain strong, and the focus should be, on these stocks as well. Especially in the auto names, I would like to focus on the two-wheeler space stocks.
Okay, so that's those are some pockets that are looking good on the charts going ahead. But we'll keep the conversation going on the other side of this very short break, and we'll be right back.
But we're closing trades right here on ET now, and we're closing in quiet for the day on Nifty expiry, although we've inched up a little bit, definitely from the session lows, but not as meaningful a move, purely in terms of a bump up as you had both on Friday as well as yesterday. Today, of course, it's Chola Finance. Shriram puts on another nearly 2% on the futures. Cement as a pack is doing very well, along with Ambuja as well as Ultratech holding out well. HDFC Bank has made a decent move. And then, of course, some of those railway-related names are looking good. Metals, of course, have continued to hold up very well, and some stock-specific movers as well added to that pack. But we've got Varun Sabu as well joining in on the show right now. Varun, hi, afternoon. What themes look attractive for 2026 to you?
Yeah, team, thanks a lot for inviting us again on your show. Honestly, we are very, very positive on the markets. If you recall, the last time when we came onto your show, we were extremely positive on Indian IT, and that theme has played out quite well. Going forward, what is looking very good to us is the banks across the BFSI space, actually. And also, we are very positive on consumers now. We were very positive on the discretionary consumer space, which we still remain. But incrementally, we are getting positive on certain FMCG names also. There has been this GST cut, which has clearly shown how growth is panning out to be in auto names, particularly that we saw. We are very, very sure on things would reflect in the consumer pack also. But the categories have to be nascent, where you have new age portfolios, where you have unpenetrated categories. That's where one should focus on. The couple of names which we like over there are Godrej Consumer and Marico, which we'll be very positive on. And apart from that, as I mentioned to you, we're very positive on financials as a space. We would be positive, we'll be quite positive on Axis Bank, Kotak Mahindra Bank from here.
Okay, so it's the banking space that's looking good to you. Varun, very interestingly, you pointed out some themes within the consumption basket as well. You've spoken about auto, but what about discretionary? And let's talk about white goods particularly. The weather has not been particularly favorable for these names in terms of the monsoon that we've seen. Winter has been harsher than expected. Where do you see some of these names like a Blue Star, a Voltas, and also let's throw in a PG Electroplast in the mix? Where are you seeing consumer discretionary goods in terms of these white goods headed in the next year?
See, nowadays all seasons have been quite severe, right? It's not only to do with monsoon or with winters. But we need to keep in mind these are great stories over a period of time. Penetration in the country in terms of white goods is also quite low. Near term, yes, probably a quarter or two, the stocks might not be in favor. But I really think that you have these plays as a great long-term play. Summers again could be harsher. Eventually, whenever we see things, whenever there is a lull, which is right now there, is a good time to accumulate these names because the stocks are coming at a big cut, right? You mentioned about PG Electroplast. The stock is already down severely from its highs. If you don't accumulate them now, then when? I would seriously think this is a great time to accumulate these names.
Interesting. That's the word coming in right now on what discretionary is looking like. But Shivangi, on the charts, what about names like an Asian Paints, which are finally coming out of their 2-year-long hiatus, and the other ones like a Britannia within the entire, larger discretionary spend basket, which have been, showing leadership in any case? Shivangi, you'll have to unmute yourself.
Yes, so out of the two names, we've seen that both of these stocks had actually become a little laggard of lately, and we've seen Britannia of lately has seen good amount of short covering move. Of course, on a long-term perspective, Britannia looks quite promising and better, but overall, I think momentum is much more in Asian Paint for the immediate basis. So if someone is looking for a trading perspective, then Asian Paint would be a much better stock to look out at. Of course, the crude oil prices have also had an impact on the stock, which has kind of led the up move in the last 9 weeks. So this one's definitely to keep on radar.
Okay, so those are some of the stocks that are looking good. But Shivangi, let's talk about some of the small cap stocks that are doing very well today in trade. Something like Bellrise Industries. I don't know if you've been tracking this stock on the charts. You have Anthony Waste that's doing well on the back of an order win. So is GPT Infra Project, Sangvi Movers. So a bunch of the small cap names are doing well. Shivangi, do you have a view on any of these?
We've kept a close watch on these stocks, but overall, these stocks have actually kind of gotten into good momentum. Overall, if we look at individually on a larger time frame perspective, these stocks have just started to move ahead, and they have been in a laggard manner from quite a long period of time. So volumes have, of course, risen from the last three sessions, but I would still, go for a wait and watch here and go for better momentum stocks.
So wait and watch approach on some of these small cap names that are making all the buzz on the street today. And in fact, amid a market that is largely tempered, just take a look at what the small cap index is doing. It's inching towards a 0.5% move right now, 0.4% higher on the small cap space. And this is the only pocket of green that we're seeing in the market for now. We still have about 20 minutes of trade left. So let's see where the Nifty ends up for the day. But Varun, let's talk about one stock and in fact the entire sector. It's Puravankara today. That's up and above 15% on the back of land acquisition. On the back of this, give us your overall view on real estate. What kind of moves are you expecting going ahead? Because we've seen a mixed bag. Some stocks have done well, some stocks have been absolutely tempered. What's your take on real estate?
See, real estate has space. If you see, they generally have a 7-8 year kind of upcycle. The cycles last longer, right? It's been about 3-4 years of good cycle that we have been in. Plus, if you see, when we talk about inventory, how things have been, if you really go out searching for inventory, say in the commercial space, you're hardly getting any. There's a crazy rally happening in commercial rates that we're seeing. In terms of residential also, the ones which one actually wants to buy is not available easily. So there is a lot of demand. Obviously, it has to do with a lot of wealth creation which is happening in the country. If you see, all the asset classes, be it gold, silver, even equities to an extent, have been in a good run for a long time. And all these things help when it comes to real estate demand. I think real estate still looks to be a very attractive space with a 12 to 24 month view. I would still think that all of these names are looking good to me in this space.
Okay, so that's on real estate. We've spoken about FMCG, IT, realty, pharma. We've also spoken about some of the metals. But let's talk about the kind of moves that we've seen on a year-to-date basis in something like a Hindustan Copper, Hindalco, Hindustan Zinc, Nalco. Of course, some of them have been recent movers on the back of silver touching an all-time high. And for someone like Hindustan Zinc, about 30 to 40% of their revenue comes from silver. Varun, any view on some of these metal names on the non-ferrous side? Or if you're preferring the ferrous space, how would you be playing the metal space right now, given the kind of run-up that we've already seen on a year-to-date basis?
Yeah, so we are one of the few houses who has coverage on Hindustan Copper also. And we had initiated coverage a while back. You've seen crazy rally happening in copper as in on the LME. You're seeing copper prices shoot up significantly. You're seeing silver prices shooting up significantly globally. And that trend is not seeming to stop. There is obviously a clear shift from dollar being the reserve currency of the world to other precious metals seeing that kind of buying, right? There's a shift happening clearly. That's what is reflecting in the stocks here. Plus, the way dollar index has been coming off, it's always positive for metals. I think till the time this trend is on, and I don't see that changing anytime soon, commodity stocks are going to remain in favor, especially the precious commodities.
Interesting. Okay, that's the view coming in the commodity space. But Varun, I think, it's important to also figure out what's looking like it's, reached its peak, at least in the near term, or the best could be behind that sector. Any trend that you're picking up?
See, honestly, IT has had a pretty decent rally recently. One will have to wait and watch on how things pan out going forward. I believe this could be a good time to trim some IT. We have been very, very positive on the IT space, as I mentioned to you. Just that the rally has been pretty sharp, and there is still this fear of AI, how AI is going to pan out, how Indian IT is shaping up to capture that, etc. It's just that uh, I understand that AI could be a big opportunity, but one will have to see how that shapes up, right? The recent rally gives you decent enough gains to book for now, and probably one could wait and see another quarter or two, see how the revenue growth is shaping up, how order booking is flowing further, what the outlook is coming. So probably it could be a good time to trim some IT and look to, as I told you, look to add some financials, discretionary consumption, FMCG consumption, and all of these for now.
Okay, that's the take on where to be cautious in the market and what continues to look good. But let's once again shift focus, get stock specific and pull up the stock of Anthony Waste. That stock was doing really well for itself, about an 8% gain on the stock around the day's highest point. We'll see what that stock is up to right now. Continues to be over there, about 8.7% uptick over there. This is on the back of the news that the company has bagged a 330 crore rupee municipal solid waste pre-processing contract from the Thane Municipal Corporation. My colleague Ravinder is joining us once again with more details about this order win for the company. Ravinder.
Well, as Antony Waste can be in focus on the back of their order win, where company's subsidiary Antony Lara Inverio Solution has awarded a solid waste processing project by the Thane Municipal Corporation, and the scope of the order will be pre-processing of approximately 600 to 800 TPD of municipal solid waste at Bhiwandi, which is owned by Thane Municipal Corporation. And this order will be on DPOT basis, design, build, operate, and transfer basis with 10-year O&M responsibility, and the value of the order is approximately 330 crore over the concession period, and the capex for this order will be approximately 67 crore, and this will be fully reimbursable by the TMC upon the Thane Municipal Corporation upon achievement of defined construction milestone. And commenting on this order when management say that this project further strengthens company's relationship with Thane Municipal Authority, reflecting the trust placed in their execution capabilities and operational track record. Remember that last week company has also received order of rupees 1,330 crore from the BMC. So on that day also stock was up more than 15%, and today company has also received order of rupees 330 crore from the Thane Municipal Corporation.
Right, okay, that's the word coming in on Antony Waste, in case you're wondering why that stock is holding the way it is. But the asset classes which continue to knock in or clock in fresh highs for themselves pretty much on a consistent basis have been gold as well as silver, and they've seen massive gains all through this year. In fact, Ashesha is here with a roundup on how these commodities have panned out over the year gone by.
Well, yes, precious metals have yet again scaled another record high in the global market. In fact, spot gold has now crossed that $4,350 per ounce mark in the global market. Silver now nearing that $70 per ounce. That one, remember, has seen an uptick of nearly 3.5% in trade today. Now, the two main reasons, one of course is escalating geopolitical tensions, and the second is expectations of Federal Reserve rate cut, which is likely to continue in calendar year 2026. Now remember, as far as the gold and silver performance is concerned, this is likely to be the best performance since 1979. So best performance in the last 4 decades. That's the kind of performance that we've seen in the precious metals market. In fact, let's also put some spotlight and some light on the kind of performance that we've seen on a yearly basis. So on a year-to-date basis, gold is now up a solid 69%, with silver surging about 135% on a year-to-date basis. Central banks continue to buy in the global market, so that is one of the reasons. Apart from that, escalating geopolitical tensions, surge in precious and safe haven demand also continue to aid demand for precious metals. But yes, another milestone coming in for both gold and silver, with both of them scaling a fresh record high in trade today.
Okay, that of course is holding out very, very smartly. And Varun, want to get you in here. I know we are driven to talk about equities, but what about the multi-asset strategy which has worked out all through 2025? Do you think a similar portfolio allocation is going to work in the year ahead too?
In my view, one has to go heavy on equities now, particularly Indian equities. We have seen the broader index yet to perform. It has been weak, quite weak for a while now. While we're seeing earnings growth, etc., to remain pretty good, sharp, we're expecting the second half to be even stronger and the outlook going forward to be very strong. We have seen decent enough run in gold, silver, and I'm not saying that the rally is going to stop. But the major compounding, the major uptick which you're going to get is in equities now across the broader indices. Unfortunately, people have been concerned around the trade deal not happening. There have been concerns around how things would shape up in terms of earnings, etc. But nothing has changed. Things have only turned out to be better. The steps like the GST cut, the tax changes, the rate cuts by RBI, etc., are significant positives with a 2 to 3 year earnings compounding per se. I would be very positive equities, and I would really recommend people to go heavy on equities, shift exposure from other asset classes to equities for sure.
Okay, so Varun, on that note, while you're very positive on equities, would it be the larger end of the market where there is relative safety compared to the broader end, or do you believe that there are still some stocks where valuations are looking very attractive from this mids end of the basket, and they could be the high performers of next year?
The bigger thing has been that valuations in the mid and small caps have become more attractive. If you see the larger caps, they have done quite well, and they will continue to do well. It's not that larger caps are any expensive; they're also quite reasonable that way. But the mid and small caps has gone through their own pain in the last 12 to 15 months, and that's where the opportunity is lying. Plus, now that investors will start rolling another 12 months forward, you will start seeing stocks being way more attractive again, right? So I'll just give you an example. One of the names being Dixon. Dixon was a stock which people used to find it to be very expensive at one point in time. Today, that stock, if you look at on a FY28 basis, it is now available at some 37 times earnings, which is nothing for a stock where earnings are expected to compound at 40% CAGR. So there are names which are looking very attractive from that per se. And one has to really draw the screener right, great management, great businesses with strong earnings compounding. That's where you have to put your money in. And a lot of mid and small caps are having that opportunity, honestly.
Well, and talk about what happened in the primary markets. How can one ignore that all through 2025? And it seems like 2026 also is going to be a big bang year for some mega IPOs which are awaited. And as you can see on your screens, that Oyo's parent, that's Prism, has got an IPO nod now. So it seems like it's going to be sometime early 2026. Who knows what the exact timing is going to be? Of course, this has been something in the offing. Not just Oyo, but you've got NSE and many other marquee names, Zepto, which are all touted to IPO in 2026.
Absolutely. And it's going to be very interesting to see what happens in the quick commerce space once Zepto is actually in the market as a listed player. Of course, we've had reports recently that say that even if Zepto becomes a listed entity, it's not going to change a lot of market share structure for the other two listed players, because it's been quite some time that they've had to consolidate market share as a listed player. Varun, do you agree with this view that we've seen coming in from one of the brokerages recently, saying that Zepto's listing would not have a material impact on the existing other two quick commerce players?
See, honestly, I don't agree to that. Share price per se, stocks would consolidate for a while. Reason being that competition getting money is never healthy in this space. And that's where the worry is. But if we talk about the cash balances which are already lying, say, with an eternal, it's in a very strong footing, right? It's not that they'll be able to impact the market share per se a lot to the larger players. But the point is that any kind of competitive intensity coming in any space doesn't let the stocks do well, right? So I think there will be an impact to the stock prices. Stock prices would remain probably here because we've already seen one round of strong correction happening here. But I don't see any reasons for any near-term upsides in these names for sure.
Right. Okay, that's the take coming in right now on what the primary market action is going to be like. But as we wind down for the day, one is seeing a pretty sedate market as opposed to what you had at your hands both Friday as well as yesterday. That's Monday. So while we are closing in at the session highs, it's been a very narrow band that the Nifty has flickered in at. And yes, 26,200, roughly around that mark is where the Nifty futures are currently. The star performers, of course, have got to be Shriram Finance. The way the stock has actually moved ever since the MUFG announcement came by, last 3 days you've had a large cap stock as this one, which is not quite typically high beta in nature, move the way that it has. I don't know if we can bring up the 1 week chart. Perhaps that would give you a better sense of how the last 3 days price action has been on Shriram, absolutely flat. And then in the last 3 trading sessions, you've had almost a 13% move coming in on this particular counter. ITC held out very well today. And then, of course, Tata Motors Passenger Vehicles as well has done its bit along with Bajaj Auto. Shivangi, come in on the charts of autos and especially the PV segment. While it's all been about, M&M and Maruti showing leadership, do you think Tata Motors PV can finally play catch up in the new year?
Absolutely, Aisha. Auto have been, one of those counters which have actually gained up quite a lot of momentum. And of course, seasonality-wise as well, we see this quarter tends to do quite well for the auto space stocks. But of course, the outperformers have been Maruti and the two-wheeler space for that matter. But talking about Tata Motors, this stock has showed a little bit of lackluster move. So I would still go with the outperformers, which is Maruti and TVS Motor for that matter. These have been consistent players. Apart from this, one could also focus on a Bajaj Auto, which has also been slightly more volatile, but on year-on-year basis, it has also done quite well. So these are the names that one could focus on this space.
Okay. And Varun, from the hospitality space, we were just talking about how Oyo's parent has received that SEBI approval to start its IPO proceeds. Where are you seeing value or what's looking good amid the hospitality space? Because on one end, you have the big names like IHCL and ITC hotels. On the other side, you have some of the more value-focused names like a Chalet, a Ventive, Lemon Tree. Where are you seeing growth momentum, or where do you think one can see attractive returns from the hospitality space?
So I totally agree with you that we are more positive on others have had their fair share of run. It's not that your room rates are going to shoot up significantly from where they are. There'll be average inflation. So there was a time when we saw significant rally in the way the room rates turned out to be, right? But that's not going to be any more the case where a very, very significant bump up comes there. Obviously, these are great compounders and they will compound over time. But the immediate upsides will be the names which are right now a little cheaper in terms of valuations. One space one should keep an eye on is the luggage space, where we believe that there is some traction coming up, something like a Safari, etc., where things are looking to pick up in terms of the industry. So could be interesting to look at those names if one has to really play the luggage side.
Right. Okay, that's the take coming in on what some of the interesting pockets could be. But for today, of course, Coforge has seen a fall of about almost 5%. There's been Mazga Dock as well, which has fallen a little bit. And largely, one would say some of the movers from yesterday, Infosys being one such case in point, that's fallen about 1.25%. Bharti as well has fallen about 1% after that massive move in the stock yesterday. Eternal, Bajaj Auto, Trent, TCS, ICICI Bank, SBI have all managed to close in the red as we speak. But Shivangi, on the charts for some of these names, Trent, for instance, quite the bottom-up case, one of the rank underperformers all through last year. What's in store for it this time?
Yes, I agree that they have been quite underperformers from a really long period of time. But then again, the kind of recovery attempts that we are seeing on a recent basis is also, not very substantial for the stock to move, quite a lot. We've seen that a stock like Trent has moved down by more than 40% on a YTD basis. And even though we are seeing that from the last 3 to 4 trading session, there has been a good support near 4,000 odd levels, but follow-up is clearly missing in these stocks, and call writers have actually jammed their position, and which is why it is making the upside capped. So, this one requires a lot of unwinding and short covering move to again move ahead.
So that's the tail on trend that we've seen a sharp cut. Varun, what about DMart? Because that stock, yes, some quarters have been okay for the stock, but overall, structurally, it's starting to look slightly weaker compared to some of these new e-commerce and quick commerce plays. Do you think DMart has what it takes to compete against these newer and emerging platforms, or do you believe that the run-up that the stock had seen is now behind it and it could take some time for recovery?
See, DMart is, if it comes to be, if you're talking about, say, longer term, if you're talking about 2, 3 years hence from here, all these disruptions, as I mentioned about what is happening in Eternal and all these cases, they're going through some kind of near-term disruption which is there, right? Similar thing is happening in this space where the online digital, all of these platforms are impacting things to an extent. So yes, near term, probably things could be a little difficult, a little tricky with a 6 to 12 month view. But one has to keep in mind that DMart is also coming up with their value proposition in terms of the online delivery also. And apart from that, they have their own stores. That's the biggest strength which they have. It's their own asset, right? And the kind of bargaining power they have with suppliers, no one else has. And the discounting which DMart provides, I don't think any platform provides and will not be able to provide over a period of time. There could be capital which people can run with for some time, but not over a longer period. So DMart is a great asset to own with a 2, 3 year perspective. And it's one of the best compounders which one could have in your portfolio. But near term, yeah, there could be some pressure on it.
Okay, Varun, appreciate that view. And Varun and Shivangi, thank you so much for your time today. But on that note, let's take it across to my colleague Ashesha, who's waiting by to sum up today's trading session for us. Ashesha.
Well, yes, Nehi, turned out to be an absolutely flat session on the Indian markets. Nifty is ending near that 26,165 odd mark. We've barely seen any action for the benchmark indices in trade today. Nifty Bank, that one is also ending absolutely flat for the day. That one should come up for you on your screens. Nifty Bank is the one that we are talking about. 59,265 is where it is ending for the day, nearly 40 points lower, but largely we've not seen any action over here as well. Nifty Small and Mid Cap Index, that one was in action today. We saw a whole host of individual stocks that were buzzing based on news flow. Nifty Small Cap Index bucking the trend, ending the day with an uptick of nearly 0.3%. And Nifty Mid Cap Index was also moving in tandem with the Small Cap Index. In terms of individual stocks that were moving in trade today were Coal India. That one, in fact, was up 3.5% at one point in time. The biggest gainer on the Nifty 50 index. That's Coal India for you at 400. And in terms of other individual stocks, we also had Ultratech Cement. In fact, the entire cement basket was in focus today on the back of that ACC Orient Ambuja amalgamation news that came in overnight. Ultratech ending 1.2% higher. Power Grid was also in focus. That is also ending the day with an uptick in trade today. On the losing side, IT stocks were under pressure today. So something like Infosys, TCS, Tech Mahindra, all of them continued to remain under pressure today. In terms of individual sectors, metal stocks were buzzing in trade. In fact, NMDC, that one should come up for you on your screens, up 4.5% as we speak. We also had Hindustan Copper and Sale, which are ending the day with some amount of gains in trade today. So yes, a whole host of buzzers from the broader markets, but on the index level ending absolutely flat near the 26,170 mark. Nifty Bank also in tandem, although we did see a slight bit of downtick by the end of trade today. But that's all the time we have on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side.
in association with SBI.